Are you new to real estate, struggling in real estate, cash buyer, or wholesaler, looking for better ways to close more deals? You're in the right place. Each week, I pick a random house off the internet, analyze it for a cash deal and a creative deal. Whether you're starting out or already seasoned, this podcast was specifically designed to give you practical tools that you can implement right away. When I created this podcast, my goal was simple. It was to help beginners and struggling investors close their first deal or their next deal, all using low to no cost tools to analyze properties and craft strong offers. Welcome to the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy, second generation investor and realtor with 19 years in the business. This is the weekly deal analysis. Let's get into the show. Pumping the brakes. Before we dive into this week's episode, can you hit that like button for me? I really appreciate it and it helps channel out a lot. This week on the show, we are jumping over to Dover, Delaware, and we're going to look at 2272 Forest Ave. And this is a 3-bedroom, 2-bath home. It is a little over 1,600 square feet. They're asking $350,000 and they have been on the market for 345 days. Let's take a look at these pictures and see what it tells us. Nice little rambler, um, otherwise known as a rancher. Same terminology. And a concrete foundation, it looks like. Here's a well. Big 2-car garage with side door. That's always nice. Flat yard. Deck off the back there. Septic. That's what these caps are here. Fresh paint, fresh carpet. Looks like electric baseboard heat. They didn't go with the standard grays on this one. It looks like they went back to the 90s beige. Looks like we got some wallpaper over here. Yeah, that's definitely wallpaper. And some borders. Cool looking cabinets. I like that wood grain look. Stainless appliances. Seemingly good sized rooms too. Laundry. Nothing really spectacular, but overall pretty good clean house. Definitely got to get rid of the wallpaper. Huge basement. Unfinished. I like it. All right. What else can we learn here? Okay, details 3-2, well maintained. West part of Dover. This really isn't telling us that telling us anything we didn't already know. They originally listed at 365 and looks like they've been chasing the market down a little bit, but their last price drop has not been since October. It is currently now January. Happy New Year. 340, 288. Median list price 335, sold price 315, days on market 54. So this has well surpassed that. When did this one? Oh, so this is under contract at 275. This off market. When did this close last? Oh, not, it says 16, so that's not relevant. We have one under contract at 275. See what else is similar in the area. Not giving me anything for sale in there. What about, or excuse me, anything sold over there? It's giving me plenty for sale. So just showing me there's a lot of competition. Based on what I'm seeing here, knowing that the neighboring home sold for 275 or is under contract at 275, I think our all-in top best case scenario would be 300,000. So we're going to use that as our ARV or after repair value. Now we're going to look up rents and see what we think we can get for this thing rental wise. Apartments are around 15. Well, that's a single family at 15 as well. Apartment, single family for rent for 23, 24. Based on this, I think we're gonna go with a rental price of 1900. Um, we can certainly nail that down closer when you talk to somebody local, whether it be an agent, property manager, or doing your own research. But I always recommend that. Now that we figured out our ARV after repair value is going to be 300,000 and our rent price, we're going to go with 1900 to see how these numbers break down. Now we're going to jump to the InvestNest and analyze the cash deal. I've got it pulled up here on the InvestNest and I love this site. Super user friendly. There'll be a link below. If you want to try it out, you get 1 week for free and 50% off of your first month. Try it out, see if you like it. I personally use it for analyzing every single deal I look at. I love it and it's very user friendly and easy on the pocket. The InvestNest is saying it's valued at 346. I disagree with that, and the rental numbers are 1680. So we're going to check with the HUD website to also verify that. But let's finish going through here before we get to that step. This just gives us some good information on the property, how long they've been there, how long it's been on the market. And if you are a skip tracer, it's built into the system and they don't charge extra for it. Estimating no mortgage payment on this thing. So they bought it cash maybe or paid it off. Who knows? 2012, they paid cash for it. Yep. Good for them. So this likely would work out perfectly for uh, a seller finance offer. We're going to call this just the property address. Okay, our purchase price. On a cash price, we're going to offer 70% of ARV minus repairs. Overall, I think the house is in great shape, but it does need to get rid of that wallpaper and overall just freshen things up. I think we're going to put about $10,000 in. So off of 370%, I can't do math in my head, so I'm going to use a calculator real quick. 70% of 300 would be 210, and we're going to take off 10,000 for our repairs. So we're going to offer them $200,000. Closing costs, we are going to pay both sides of that. That's going to be about 4%. Our lender, our hard money lender or DSCR lender, debt service coverage ratio lender, they're going to charge us about 2 points on every single loan. And we do want to roll those improvements into that loan at 10,000. We're going to end up putting 25% down. I do want to kick these terms out to a 30-year, and we'll leave the rate overall at a solid 7%. All right, they're saying 1680. We were guessing about 1900. Now we're going to jump over to the HUD website, otherwise known as Section 8. I've got it pulled up here on the HUD fair market rent site, and I will drop a link below in the comments as well. So for a 3-bedroom, they are stating that they will pay a maximum of $2,080 a month. So I think we're going to stick with that 1900 because it's rare when you do get that full voucher from Section 8, but I always knock about $100 off. So We're going to stick with that 19. Let's go back to the InvestNest and plug that in. Our property taxes, we're going to go with what they say on that. Insurance, I like to factor in $125 a month, which is just $1,500 a year. Property manager, standard across the board, is going to be 10%. Our tenant's going to be taking care of all of our utilities. There is no water and sewer because it's on well and septic. Our reserve fund, or I call it my war chest, it's 5% for repairs and maintenance, 5% for vacancy, and 5% for capital expenditures. That's going to be more your big ticket stuff, roof, HVAC, things like that. We'll leave an appreciation rate of 2%. I like to increase my rents 2.5% per year. We'll plan on holding it for 10 years, and we are real estate investors. We don't pay full commission. All right, let's see what these numbers spit out. If you've made it this far in the video, you're clearly getting some value out of it. If you would, please hit that like button for me. Now, back to the numbers. Okay, here we go. We got a cash flow positive property. For $71,000, you can make $216.72 per month. That's $50,000 down, plus your closing cost and your renovation, which is rolled in, so it's only percentage-wise. Mortgage payment of just under $1,000 at 7%. Our cap rate is 7.29, DSCR 1.22, cash on cash 3.66. It's not a great deal, but it is a cash flow positive property. ROI, or return on investment, just shy of 12%. 1% rule, it does not work. One of the reasons why I do not follow it. And another thing I love about the InvestNest is it breaks all of these fees down, so I know where everything's going. And they even go a little bit deeper and show me all the different calculations over the years. We have pulled as much information out of here as I think we can. We know it's a cash flowing cash deal. It is cash heavy, having to put down $71,000. That's quite a bit of money, or excuse me, your down payment's $50,000. So overall, pretty good cash deal. Now we're going to do my favorite part and analyze the creative side. This is my creative calculator. You can get it off my website, christhompsonteam.com. The link will be below for that as well. Our ARV we said was 300,000, and we're going to get as close to that as we possibly can on our purchase price, just to see how the numbers work. Because even at our ARV, what we think it's worth, we're still offering about $45,000 less. So you know what? I say we give them that 300,000, and we offer them a 4% interest rate. Now, to figure out our PITI, or principal, interest, taxes, and insurance, we're going to jump over to Bankrate. I've got it pulled up here on Bankrate. Love this site, bankrate.com. Link will also be below, but this is how I figure out my essentially mortgage payment every month. So our home price, we said we're going to offer them $300,000. I want to put down on 5% over a 30-year term at 4% interest. Our zip code 19904. Property tax, the InvestNest is telling us, is only 80, we'll round up to 86. 86. And homeowners 125. Ooh, 1572 is our principal, interest, taxes, and insurance. 1572. 1572. And our potential rents, we said we were doing 1900. Ouch. Negative cash flow deal. All right, so we can't do that. What if we give them their price and offer 2%? We leave everything else the same. 1264, maybe that'll work. 1264. Now it works. So that is how much even 2 points in an interest rate can change your payment. We just dropped it 2 points, and now it went from losing over $100 a month. Now it's making over $100 a month. It's pretty good math in my book. I still think it's not a great deal, but at least we were able to work out the numbers to make it work better. And our cash to the seller was at 5%, so it's going to be 15,000. This agent hasn't done anything in a year, so we're going to offer them $500 to go away. There is no assignment fee because we are not working with a wholesaler. That closing cost is going to be that 4% because we're going to offer to pay both sides. The renovations, we said, were going to cost us about $10,000. 2 months of holding is going to be 2 months of this PITI. There are no arrears, and a good transaction coordinator is about $1,500. All in, $41,000 to get $161 a month. Not a great deal. Better than the cash deal, but it will still take us almost 22 years to get our original investment back. Not a great cash deal, not a great creative deal, but they both cash flow. For me, they're both too heavy of an entry fee with the amount of money needed just to get in the door. I think I can find better properties to cash flow more. That only works for me. It may work for you. Something else may work differently for you. What are your thoughts? We would love to hear them. Drop them in the comments below. That is it for us here this week on the weekly deal analysis in the corner barn. I am Chris Thompson, that bearded guy, the creative guy. We'll see you next week.